say whether my background is eclectic or I just couldn't decide what I wanted to be when I grew up. But I got a graduate degree from actually your rival, Georgetown's rival. I went to the School of Advanced International Studies, Johns Hopkins in Washington, D.C. I got a master's degree in international economics. It's sort of boot camp for the IMF. Tim Geithner, Madeleine Albright, Wolf Blitzer, they all went to the same school along with quite a few others. Then I went to law school. I used to be proud of the fact that I went to Penn Law School. There are 8 Ivy League colleges, but only 5 Ivy League law schools because 3 of them don't have one. But Liz McGill's on the faculty. We know what happened to her. She just got fired as president. And so, but I stayed on the international side. 1 law degree wasn't enough. I got a second law degree, graduate law degree from NYU in taxation, and I went to work for Citibank. So my first kind of real job, I was international tax counsel for Citibank. But you're in the belly of the beast, if you want to put it that way. Did that for 10 years, loved doing it. Had some great dialogues with Walter Wriston. I tell people that was back when Citibank was a bank before they turned it into a hedge fund. But it was also, candidly, we sort of thought Wall Street was like getting your hands dirty. But the Wriston ran with Citibank as the finance arm of the State Department. So it fit in perfectly with my background in international studies. Then I went to the dark side. I joined a Wall Street investment bank. We were one of the largest dealers in U.S. government securities, one of the so-called primary dealers. And the thing about being a primary dealer, it's not a well-known category, but it means you get to talk to the Fed. The Fed is your customer. And there are only about 20 firms on the list. They're all big banks, but mine was one of them. That's when I really got immersed in federal finance and so forth. Then I went to work for a hedge fund after about 10 years there, a hedge fund called Long-Term Capital Management. We did extremely well and then hit an air pocket and almost, actually, you're right, Steve, we were within hours of shutting down every market in the world. Now, we did foam the runways, bringing it for a soft landing. If you think of it in deal terms, I know you're a deal maker, but this was $4 billion, all cash, 4 days, no due diligence. That was the deal. That the 14 banks, they call them the 14 families, but we did it. We got it done, but with hours to spare. Yes and no, but we actually called them. See, remember, we're a hedge fund. Who in the world? We never thought we would be rescued or bailed out or anything of the kind. We could see what was happening. We had bad risk management, as it turns out, but very good accounting. We knew exactly what was happening. By the way, one of our partners, David Mullins Jr., was the former vice chairman of the Federal Reserve, the Board of Governors. So he was a real Fed insider. But we called the Fed and told them what was happening. They didn't know. And so they came up on a Sunday afternoon as Peter Fisher, who ran the open market desk, which is what you were describing, Gary Gensler, believe it or not, who's now the head of the SEC, and another guy, Dino Cost, John Merriweather, who is our chairman, and I. We sat in a room for 5 hours. We had, of course, we had computers, but we had printouts, and we just turned the pages and went, paid position by position all around the world. And when we were done, and Peter Fisher had turned white. He's a white guy, but he had turned whiter. And he said, "We knew you guys could destroy the bond market. We didn't know you could destroy the stock markets." We were actually the biggest risk arbitrager. We were in every deal: MCI WorldCom, Citi Travelers, Lockheed Boeing. Not that they all went through, but anyway. So then Peter went back to New York and got together with the head of J.P. Morgan, Morgan Stanley, and Goldman Sachs, and said, "We got to do something." John Corzine was involved, and then they had the meeting at the Fed. And it's exactly what you described, the 14 families sitting around the table, getting pledges. It was supposed to be $250 million each, and then it would add up to $4 billion, approximately, a little bit less. But you had friends like Bear Stearns that said, "No, we're not in," and a lot of drama behind the scenes. But then they sent us a term sheet, and then just for 4 days, nobody slept. From Wednesday night to Sunday night, nobody slept, worked around the clock, and we got it done. But here's and there are good books written about it, but people say, "Well, okay, what's the big deal?" What they don't understand is that if it hadn't got done, every market in the world would have closed sequentially, starting in Tokyo, London, ultimately New York. They would have reopened at some point. But this was a major financial catastrophe that was this close to happening. That was good experience. I always say in the United States, when you screw up badly enough, they hand it over to the lawyers. So I happened to be the lawyer, so I ended up doing the deal.
How did that lead to you running currency war around the time of the 2008 crash, and why did the military start saying, "Hey, this is a new way. This could be a new way of warfare"? Actually, put you into wargaming.
Well, I came out of that very dissatisfied with the financial outcome. I mean, I personally lost money, but billions were lost. Mostly our money, by the way. That's why we weren't lynched, because it was mostly our money. But the point was, I was the lawyer, and compliance was good, legal was good, we got the deal done, etc. I wasn't the risk manager, but I wasn't intellectually satisfied. I was like, wait a second, these guys really were geniuses, and good guys. I mean, know them all, they're all friends. Myron Scholes and Bob Merton, two of our partners, won the Nobel Prize in economics the year before. They had 160 IQs, and we had a bunch of them. And I said, these guys really were the best and brightest. They really were the smartest. They really did win the Nobel Prize. And yet they screwed up badly, like unimaginably. So they must be missing something. Of course, they didn't do it on purpose. So I just became intellectually curious. I'm like, okay, what is it about the models that Wall Street uses that could lead to a result like that? And I just started plunging into physics, applied mathematics, complexity theory, a lot of branches of science, and I continued my career. But and I found the answer, which is that they assume, not to get too technical, but there's something called the bell curve, which is a normal distribution. Most events are in the middle, kind of boring, and then there are these two tails, and these are the extreme events, but they're extremely rare. Jamie Dimon, JP Morgan, embarrassed himself a few years ago, and they lost money in that big whale trade. And he said, this kind of thing only happens once every 3 billion years. Well, if you do a normal distribution, it is once every 3 billion years, except it actually happens every 7 or 8 years. So that's supposed to tell you, when the data doesn't line up with the theory, it's supposed to tell you the theory is wrong, and it was wrong. And then I started another quest, like, well, what's right? What is the correct way to do it? Turns out to be a power curve, which is a different distribution, but these are, so anyway, with that as background, again, physics and math and a lot else applied, I started, lecturing, and, I was a regular a guest lecturer at Northwestern University and so forth. And then separately, after 9/11, I was tapped by the CIA because there was insider trading ahead of 9/11. The 9/11 Commission kind of covered it up, and I know why, and I know who did it, but it was crystal clear. I talked to the New York Stock Exchange specialist in American Airlines and United Airlines, who were the two airlines that were hijacked. And he told John Mulhern, he passed away a few years ago, he said, Jim, I've never seen a more blatant case of insider trading in my life. So the CIA, it was not a law enforcement agency, that's the SEC and the FBI. CIA is an intelligence agency. So what they said was, okay, if there was insider trading ahead of 9/11, which there was, if there were another terrorist attack, would there be insider trading again? Could you find it, get a FISA warrant, break down the door, and stop the attack? And we did a 2-year study on that and came to the conclusion, yes, you could do all of those things. And then I actually worked with partners, and we built, for the agency, we built a prototype of a system that would do exactly that. So that was kind of my immersion in the national security world. So when this war game idea came up, the Pentagon didn't need any help from me in terms of war games generally, but they needed help in terms of Wall Street because they had never done a financial war game before. The whole idea was there were no missiles or bombs or anything. You're going to use financial weapons, currencies, stocks, bonds, commodity, foreign exchange, etc. So I was asked to provide that expertise. I was on the development team, but then I actually got to participate in the game. And very late in the process, we were recruiting the participants on the team. You have 5 teams, red team, blue team, all that, US, Russia, China, the teams you would expect. And but I looked at the list, and it was, CIA, FBI, Treasury Department, Fed, think tanks, universities, what I call the usual suspects. And I said to the director, I said, war involves lying, cheating, stealing, and deception. And so if you want to have that, you need somebody from Wall Street to join the group. So I got permission to recruit a couple real Wall Streeters. I got a senior guy from UBS, the big Swiss bank, and another guy who had run Citibank Moscow, and got them on the team. So we had some real world experience. And when I came home after 2 days, I said to my wife, I said, I have good news and bad news. The good news is my team won. The bad news is I played China. And that was they have a scorekeeper, and that was the outcome. So from that, so that was in 2008. We did it at the Top Secret Warfare Analysis Laboratory